Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Thursday, July 19th, and we do got a bit of economic news releases scheduled for today. Tomorrow will actually be nothing scheduled, so tomorrow will be kind of a quiet day. So let's go ahead and take a look at the weekly jobless claims. We had 352 filings last week. We figured it'd come up a little bit, about 365, and it actually jumped up to 386. So obviously not very good numbers as more people are filing for unemployment last week. And then we got the existing home sales for June. So back in May, we had 455 million existing homes for sale. So had more inventory. We figured the inventory increased a little bit more and actually dropped. So we're down to it's actually 4.3 million, excuse me about the percentage there, but 4.3 million, 4.37 million, excuse me. Boy, I can't get that out of my mouth. And then another item here is leading indicators. It's kind of projections towards numbers that will kind of indicate where the economy is moving. So this is kind of an important indicator here. We got 0.3%. We figured it kind of drop a little bit, contract a little bit in the month of June, and it dropped a little bit more than what we thought, negative 0.3% for June. So basically, the economy looked like it pulled back a bit in June. And also we got the Philly Fed. This is the manufacturing in the Philadelphia region for July. We had a negative 16.6 for June, and we figured it'll pull back. It will still be contracted, but not as much, negative 6.8. And actually, it did pull back a little bit, but not nearly as much, negative 12.9. So obviously not very. Today's economic news really isn't looking so good. We got contraction leading indicators, still more contraction in Philly Fed, existing home sales dropped, and then weekly jobless claims increased. So more people applying for unemployment. So not so good a day on that avenue. So we'll look at the headline news. Stock market is up. I guess I think what they're doing is probably cashing in a little bit on some of the, the recent downtrends. Probably trying to buying in while prices are low. And then also oil jumped up. It's been kind of steadily increasing, going up, and now we're just approaching $92 a barrel. It's like 91.72, I believe, when I looked at this morning. So price of oil is going up right now a little bit. So let's jump over to the bond market, see what interest rates are doing today. And we got a little improvement. Yesterday it pulled back and touched the ceiling, as you could see there, pulled back and basically did nothing. Today we are again approaching the hitting the ceiling, so we'll see if it holds. And the more times you hit the ceiling and it holds, the stronger it gets. So that would lead us to a possibility for worsening in interest rates as that ceiling becomes stronger. It'll probably push it downwards a little bit. Plus, we're reaching the 10-day moving average is coming up here. So at some point, we're going to reach this point here where something's going to give. So we got triple layer here, and we got this double layer here. At some point, it's either going to go upwards or it's going to go downwards. As lately, we've been kind of going pretty close into a sideways trend, but in a little larger range, from right approximately down here to the 105.60 range, and approximately where we're at right now, the 106 range. We've been kind of staying for about 2 weeks here. We can see this. We've been kind of hanging in this range here. All right, folks. So rates are a little bit better today. Hope you guys have a wonderful day, and we will see you guys tomorrow. And thanks for stopping by.